Hello, everyone. I'm Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to be providing you with your May market report. I have so many numbers today. I hope I can get them all before you in the short period of time that I have to prepare this report. And all these numbers are good except for the supply side, but I'll get to that in a moment. If we look at the big numbers, sales, average sale price, once again in May we see both sales go up compared to last year, and generally as sales have gone up since the beginning of the year, as well as the average sale price. Our sales came in at over 9,000 sales. That's almost a 25% increase compared to May of last year. And it's interesting because it's a swing upward from what happened through the course of 2022, particularly near the tail end of 2022 when the market was in the doldrums, but it has become very robust over the last 5 months. Similarly with the average sale price, it hit almost 1.2 million, which is very close to where it was last year at this time. So it seems bizarre almost that we are starting to approach pandemic numbers, which nobody forecast would happen within a 15-month period. But here we are with average sale prices almost at $1.2 million. Sales are moving very, very, very quickly, only 14 days on market. So the pace at which sales are taking place is, again, almost the pace at which sales took place during the pandemic. As I mentioned a moment ago, though, our real concern is supply. In May, only almost 12,000 new listings came to market. We should be on a 10-year average basis, somewhere around 20,000 listings coming to market at this time of the year, essentially the spring market. And even compared to last year where we had a shortage of listings, we're not even close to that. Last year, the new listings came out but 18,800 and change. So we're almost 20% off the number of new listings that came out in May. And as a result of that, there's a real crunch on the supply side, whereas the demand, as I pointed out, based on the number of sales that took place and the average sale price, has remained strong throughout the course of 2023. And you see that from the charts, the average sale price going up every month since January, excuse me, as well as the number of sales going up every month. So Toronto has become a very expensive place. If you wanted to buy a detached property in the city of Toronto, the 416 area, it is now beginning to approach $2 million as your average sale price. And in the case of semi-detached properties, 1.4 million approximately. So very expensive real estate in the 416. The only thing that it's still deemed to be affordable is the condominium sector, but even there, the average sale price during the month of May came in at $784,000. Again, indicating the strength of the market. So even our least expensive housing form, condominium apartments, are also starting to pick up in terms of their average sale price. Where does this all take us? Is this market going to continue indefinitely, going back to pandemic levels? I'd like to think that would be the case, but the data seems to point that we've reached a kind of a confluence between affordability and the available number of properties on the market. With the numbers that I've mentioned, the overall average sale price being approximately 1.2 million, and the lack of product, in addition to the fact that we have interest rates that are approximately 5% with another 2% stress test on top of that, we're just really kind of maxed out, I think, in terms of affordability for the consumer and buyers out there. So I'm going to show you two charts that you'll see. One of them indicating the number of of showings that have taken place over the last 180 days, and the other chart will be the number of offers. And you'll see from those charts that that we've sort of plateaued and perhaps even coming downwards a little bit. I think the downward trend is driven by the lack of supply, particularly with respect to the number of showings that are taking place. If you don't have supply, then there's just no properties for you to show. In terms of the offer registrations, they are connected equally to the supply that you have up there, because again, if you don't have a lot of supply, there's not going to be a lot of properties that you can offer on. But I also think that the sort of downward curve that we're seeing, it's just marginal, but we're seeing it, is also driven by affordability. As I mentioned a few moments ago, with both the stress test and mortgage interest rates at approximately 5%, we're starting to push the limits of the consumer. And just moments before we filmed this presentation, the Bank of Canada also increased their benchmark rate by a quarter point, which is going to have a further impact on affordability, because it's going to be that much more difficult for buyers and consumers to get engaged in this real estate market. So if we're looking ahead to June, I think June will be a reflection of May, but I don't think we're going to see the upward growth either in average sale prices or in the number of sales the way we have through the course of 2023 to this point. So until June, I look forward to presenting that report to you, and I hope that it is consistent with what I've said. Continued strength, but somewhat stabilizing based on the factors that I've mentioned. So until then, stay well. I look forward to making that presentation.